So we need to practice this one now. Now, let me give you an advice. If you are doing a reconstruction, read every statement to a full stop, then analyze the double entry out of it. Please, did you hear me? Read every statement.
Yes, sir.
Yes, read every statement. Please, there are words like conjunctions and punctuations, like comma, like and. This one tells you that there are two sentences put together. So divide the sentence into two. Read the first part, then analyze it on your double entry, then do the second part. Don't be in a rush. Don't be in a rush. All right. And if your double entry is good, there's nothing on earth you can't do in terms of accounting. Yeah. Yeah. Anyway, I made one of the guys, the students, that is Henry. I think most of you have heard of his name in this class. I sent him on an interview. According to the people, he did very well, and it was all about the double entry. Double entry. Yeah. So the double entry is the fundamental to the accounting concept that we are doing. Now take a look at this 2019 question. And please let me also advise this. When it comes to reconstruction, I've seen what happens in the system. There is this misconstruing concept of capital reduction. And it comes from the very old days. Of course, I am part of the old days people. And it comes there. People are consumed by what we call minority interest, majority interest, this interest, minimal loss, maximum loss, so all those things. Please don't indulge yourself in those things. If a question asks you to calculate maximum loss, I will show it to you. You don't need to go and do any math, and they will have to do a whole segregated financial statement for it. You are wasting time. You are just wasting time. So I will show you what you will do in reconstruction. I mean, we did reconstruction in advanced financial management, and it was also in our corporate reporting. Even here, you people, you don't do Z-score and all those things. So just stick to procedure, you will be fine. So for example, if you read this question, Mahadi Limited operated profitably in Ghana and now facing financial difficulty. The financial position is 2019 financial position is given. Anyway, let me also pass this comment. You see, between this one and business valuation is not accounting. So if you look at it well, this is the proper accounting part of it. But you see, the problem is that in this one, you'll be doing a balance sheet and assume that consult to you are doing a balance sheet. So it makes the whole thing double do. But they bring it sometimes. But between this one and business valuation, the one that is pure accounting resemblance is this one. Business valuation is mathematics. Yeah. So sometimes I understand why this should be preferred over business valuation. It should be preferred over business valuation. Yeah. So that's that. So this is it says it operates. Anyway, take a look at the financial statement very well. And additional information have been given to you. Mahadi operates a number of retail outlets of snack bars, and most of these outlets are rented out. The largest supplier is Banda, who holds all the debenture stock and is also a trade creditor. for 240 included in the sundry payables above. Included in the sundry payables are preferential payables, 440, an amount due to GRA. So you see, it is preferential. Like the question didn't need to say it because GRA is secured. Another word of secured is this preferential. All right. Then it says that the bank overdraft from Northern Rock is secured, or you are, by a fixed charge over the freehold property. So long as you will be selling the freehold property, the secured people must be prioritized. And the debenture stock is secured by a floating charge over company's asset. It is also secured. Secured is secured. When I was young, there was this advert they were doing called Secured. I don't know if they still do it. Yes, please. Hello. Okay, let's go on. On October 1st, 2019, Mahadi Limited has scheduled a meeting with all the stakeholders and put before them these proposals. Proposal 1 is that they are going to liquidate the company. And that will mean that they are selling all the assets for this amount. To realize means you have sold. Proposal 2 is the reconstruction. It says that Banda has made an offer to support, which would allow the reconstruction of Mahadi to continue to operate as a going concern. Under this reconstruction agreement, the debenture held by Banda would be converted. So you see, under this reconstruction agreement, the debentures held by Banda will be converted into 48,000 shares issued at 1 Ghana cedi. That is one statement. So you analyze it. Then for every 200 of the 240 trade debt owed to Banda Page Limited, is that the name? It should be Banda Limited. There would be issued a 110 ordinary share, which price is also at 1 Ghana cedi in the reconstructed company. So you have two things to deal with. The balance of the trade debt owed to Banda will be written off against the equipment of Mahadi. So check that. You'll be writing off something against the equipment. Even though you will not be selling the equipment, you write it off against it. So take note of that. All right. Then what else do you have? It says that Mahadi Limited existing shareholders would receive 1 ordinary share in the reconstructed company and credited as 1 Ghana cedi. All right. That is also another statement worth analyzing. So I will be asking you to do the analysis. Hey, what we should do, because the more you do it, it means that you are okay. You when you face reconstruction, it wouldn't be a big deal. All right. So in exchange for every 5 presently held, the balance on the retained earnings is not absorbed by the existing shareholders in the share exchange above. And it is written off. That one, you need not to be told. It is always written off. If it is not going to be written off, then there is no essence in doing the reconstruction. All right. Then an additional 140,000 shares. So you see that the shares are coming in and will be issued to Banda for cash consideration. So this one, they issue the share for cash. So the double entry is stated capital and cash. All right. Then, in order to improve the liquidity position, it has been estimated that the Banda management of Banda Limited, by management of Banda Limited, that after the reconstruction, Mahadi will earn a net profit of 54. That this thing, when you get it, it means you will be likely to do earnings per share. It means that if they do the reconstruction, profit will improve from negative to a positive 54,000 per annum. So this one, you can do, they can even give you a cost of capital for you to do the perpetuity present value or the annuity present value of the money. Okay. So now, they said that ignore, other relevant expense. Ignore reconstruction and liquidation expense. They are saying ignore because if you not be ignoring, it will appear in your things. Assume Banda Limited can currently earn 15% per annum on new investments involving similar risk to those which would be incurred by investing in Mahadi. Assume that the adopted proposal will be implemented immediately. Show the total amount Banda would receive in case of liquidation of Mahadi. And also prepare a statement of financial position after the reconstruction on the assumption that Proposal 2 is adopted and implemented. If it were to be today, in this new, even the syllabus that passed, so when they started the new syllabus, they awarded 20 marks for this, but later on they changed the marks to 15 marks. And it was sweet when it was 20 marks. Because you realize that when you liquidate, there isn't much there, but you are getting 10 marks. So that is that. So the first step, according to the question, we are supposed to liquidate. And when we will liquidate, what did I say you will do? On liquidation, what do you do? Yes, what do you do?
You sell the asset and distribute the proceeds.
Okay, so let's sell the asset. They said if we are selling the asset, the monies we will get is this. So the sales proceed, realization is you have your freehold property to be 56,000. Equipment 204. Inventory 40,000. So how much will we have?
$300,000.
300,000. All right. This class was just to show you how the reconstruction is done. We will work one example to God willing tomorrow evening. Then I'll show you issues about ratios you need to take care of. But yeah, so let's finish this one quickly and I can allow you to go. So in the course of the day, I will entreat you to go and watch my video on reconstruction and add more examples to you yourself in the course of the day. All right. In fact, I can see many people are sleeping already.
Zatamas,
Yes, please.
you said there's 7 questions, starting from where? In your manual?
Oh, the 7 questions. This is question 1. Oh. So you start. This is question.
From November 19th.
Yeah.
To heading.
Yeah.
Oh, okay.
So you can try your hands on them.
Okay, sir.
So let's distribute it. Let's distribute it. The secured people first. So who were the secured people? He said that the bank overdraft was secure. So we start with Northern Rock. The bank overdraft is here. This is it. That is that. Then there was another secured. Where is the other secured? This is it. The bank overdraft is secured over this property, and the debenture stock is also secured. And we were told that GRA something is also here. All right, so that is that. So can you help me fix out the figures? Northern Rock is 68,000, so you must pay the 68,000. So let's pay out. Abi, there will be balance. We are using this money to settle. So after 68,000, you are there. And again, you should also have the other secured. How much is the other secured? The debenture. 10% debenture. That is 48,000. So you can also pay.
Mr. Thomas,
Yes, please.
please, sir, it is secured against freehold property. Is it not the 56,000 we are taking?
Which one? Which 56,000?
The Northern, the bank overdraft.
But this is it now.
Now, you know, the value of the property, freehold property is 56.
Oh. Yeah. The value of the freehold property is 56. Yeah, it's true. But at the end of the day, the remaining is still an overdraft.
Yes, please.
But it's just that one is not secured. So we can rearrange it to somewhere else.
Okay, sir.
Yeah, that is it. It's true. Thank you for drawing my attention. You still have to pay, but in terms of priority, it will go somewhere else. So the value of the secured asset is 56,000. That's very good. So it means when you sell it, that's the first thing you need to pay, like I said. Then the debenture. What's the debenture? It's 10% also secured. So that one, it has to also go. So all the securities, the secure one, and I told you that GRA2 is secure. It's money that you need to take care of. So preferential payables, GRA, that is 44,000. So you deal with the secured people first, then you are coming to the unsecured. The unsecured but still liabilities. So which ones are we left with? So even the bank overdraft, the one you took out. If the money is sufficient to pay, then we have to pay.
We have to pay.
Yeah, we have to pay. You see, this one, they set a floating. Now, in financial management, I remember when I was learning these things back in the 2016. The guy who taught us also, he's called, I've forgotten his name. Some Indian man, I've forgotten his name. He also distinguished between floating and fixed. Which one should come first? Because the fixed is on an identifiable asset. When that asset is sold, it will go. Then the floating is floating. It doesn't have one particular asset. It means that you can prefer it to another asset. So the floating is also secure, but that one, there is no specific asset. It cuts across any of the assets. So it means that if you sell, the fixed one must take priority. Because for the floating, you can defer it to another asset. That is it. So that's why the fixed comes first before the floating. And so you have this. What else? The debt. We need to look at the remaining. I think 300,000. We can still pay some of them.
Yes, we'll get
So the balance of the overdraft we can pay now, which is the 12,000. You see, if you bring 68,000 here in this one, you can just do 68,000 here, but be careful because another time it won't get to this point. But a proper segregation gives you the marks. All right, that is the thing. So you are paid the bad debt, the overdraft. What else?
Overdraft.
What else do we have to pay? Sundry payables, right? Because we have paid this, it's left with this. But the balance, will it be able to pay everything?
The balance will be left with 152,000.
If you pay,
So when we take away
if you pay all these things, you'll be left with 152,000. Check it well.
but when we take away the 12, we will left with
150.
140.
140.
Yes.
Okay.
140,000.
So we will be left with 140,000. But the payment next to be made. The payment we have to be made here is 412. But even with the 412, they said there is somebody who had something inside this, right? When we were reading, okay, so
that's a GRA paid.
Oh, okay. So it means that the balance we are actually left with, the GRA is paid out of it. So
yes,
it is the sundry payables is left with how much?
Left with 196.
It's 412. If you take GRA, it's 196. No, it's not possible. 412 minus 44. It can't be 196.
4.
The sundry is 412 and GRA was
412,
inside it 44,000. So how much is left for the sundry?
368.
368.
36.
So 368,000.
Yes.
So it means that we cannot pay even all our sundry payables. So what is the percentage we can pay? So do 140 over 365. That gives you the percentage we can pay. Then the analysis, therefore, is that so these people have been paid. So you can only get a percentage of out of the 368, the company can only pay 140. And so
140.
What is the percentage? Then you also state that the stated capital people will receive nothing. The stated capital people will receive nothing. And inside there, this 412 to 240 was for, what is that, Banda, right?
Yes.
Banda. So it means that as the 240, even the 240 of Banda, we cannot pay it. We can only pay, so if we are doing the distribution well, you see that even a 240 out of this, we can't pay. We only paid, so as far as, please, what's the percentage?
38%.
38%. Good. But the relationship between him, the company, and the Banda man, even if we are using this money to pay his 240, how much is the percent? How much in terms of percentage wise? How much will he get? Because you need to do the analysis. Because that is why the question said that. What did he say? And how much Mahadi do the liquidation? The total amount Banda would receive in case of liquidation. So do that. How much will he receive? If we are left with 140,000, so he can only get 140 out of his 240. That's the only thing he can get. All right, that's the only thing he can get. So Banda, if you look at that Banda man, the issue surrounding him was that, so first of all, this 240, he can only get 140.
That's 58%.
That's 58%. So you can say that.
58.
So you can say that. So this is you liquidating and sharing. Stated capital people will receive nothing. All right. So you can say that. Now, what you need to also understand in here is that this thing is a subjective analysis that you do. Answers will never be the same. You see the 140 that we are left with, and Banda has 240 in here. Somebody can decide to say that they will pay we don't know the component of the sundry, the total component of the sundry. So whoever the remaining is will be paid, and Banda will receive nothing. Yeah, because if you pay 140 from this, the balance still, you don't have anything to pay. So it's a subjective analysis. So please, your answers may never be equal to somebody's own. In fact, in our days, for example, they will even say that when you are selling the asset, in this question, you are fortunate, they gave you the value. Some questions, they didn't give us the value. So you are going to use your own assumption and say that if they sell, let's say, the inventory, they will get only 90%. Somebody too has stated that if they sell the inventory, they'll get 80%. Like that, but so your understanding of the thing matters, not equal answers. No. All right. So liquidate it, share it. In terms of the sharing, be mindful of the priorities. All right. So that is that. Okay. So now you are done. The next thing to do is to do your reconstruction. So this is what you were doing for 10 marks in 2019. Would have been nice. So that is that. Now you are coming to do the reconstruction. And in the reconstruction, you need to make sure that your double entry is well analyzed so that at the end of the day, you get the balance. So in the reconstruction, I said that the first account you need to do is your reduction account. These are workings, okay? Then, because normally if you don't do this one, balance sheet preparation can be a problem. Then also prepare your capital account. So look at the issues here, prepare an account for them. So prepare a stated capital account. You can choose to ignore the capital surplus, but capital surplus is your part of your reduction. So you can remove the capital surplus to your reduction account. So and call this one balance brought down of 68,000. So it means you debit the capital surplus and you bring it here. So basically that is that. You look at your retained earnings, for example, you say retained earnings written off. So remember, that is what we did when I was introducing the concept to you. Then you look at your 10% debenture, your stated capital. We have still stated capital. The stated capital, be mindful. So how much is that? The balance brought down is what? 100,000, eh? And how many shares constitute that 100,000? How many shares is that? How many shares constitute that 100,000?
400 shares.
400,000.
Okay, so it means it's 400,000 shares.
Yeah.
You can do that note in somewhere, anywhere. Then you have a 10% debenture. So create an account for your 10% debenture.
So please wait for the 400,000.
Divide 100,000 by 0.25.
Okay.
The price. Now, if it's even stated here.
Okay.
Yeah.
Thank you.
10% debenture. Please, it's not 400,000 CDs, so a share, so. So balance brought down for the debenture is 48,000. So you can also do for the sundry and the bank overdraft. After the bank overdraft, you have to do it because it's compulsory. Because I told you that do a cash balance. But before then, you can do sundry payable. You can do this thing fast. You don't need to make it nice. Like you want to draw nice lines and all those things. Please, you don't need to do that. And the reason why some people are also of the view that this part of the question accounting should not be examined that much is the fact that we have stopped the use of the T account. But you have to be careful. And so from here, you go and prepare your new balance sheet. So that is that, the new SOFP. Okay. So now let's look at the statement one by one. Have you fixed in all the balances? Sundry payables is how much? $412. Then the cash book, the balance brought down is at the credit. It's an overdraft, 68. So that is that. Now, let's analyze the statement of the reconstruction one by one. Then we fix them, balance it, then we are good to go. Okay. So it says that if the reconstruction proposal 2 is going to happen, this is what is going to happen. Banda has made an offer to support, which will allow the reconstruction of Mahadi to continue as a going concern. Under this reconstruction, the debenture held by Banda will be converted to ordinary shares. 48,000 ordinary shares, and the price is 1. So you are exchanging. So where is the debenture? So this is where it starts. You see this debenture? They are saying that they are converting it. So it's going to go away, and it's now going to turn into what? Ordinary share. I hope you understand it. Class, I hope you understand the statement.
Yes, sir.
Yes, please.
So it means remove the debenture from the system and let it become equity share. So all you need to do is to take it to stated capital, 48,000. So this thing is cancelled off. It will not appear anywhere again. So we go to our stated capital. We bring in 10% debenture. And that one is coming with 48,000 shares. And the amount is at 1 Ghana cedis. And it will also be 48,000 cedis. That's all. That's all you do. Then I told you, you have read the first day, and this and is a conjunction. So it says that, and for every 200 of the 240 trade debt owed to Banda, there will be issued of 110 shares, which is also at a price of 1 Ghana cedi. So for every 200 of the 240, see, this kind of analysis, we've done it all the time. We've been doing it in earnings per share. This is the money. The money is 240,000. So for every 200 inside that 240,000, they are going to give him how many shares? 110 shares, right? So how many shares will he be getting? How many shares will he be getting? The total shares is how much? Guys, let's work together and be fast because I can see my battery here is draining.
Wha- 132.
Yeah.
132
132,000.
shares. So these are the shares that is kind. The shares are priced at how much? I hope, and please, people should be confirming figures because I can see already in fact, in 11 times, I can see your answer is already wrong. Is it 200 or 20? Because in 11 times any number, you just have to add these two figures together, which will be 3, and you put it in between them. Then I have 2 zeros here.
132,000.
Then there is another 0 here. Yeah. So
The 132,000.
So it's 132,000 shares.
Yes.
132,000.
Yes.
Yes.
Yeah.
Other zeros.
Yes. So it means that, you see, it means that he's coming in with another shares of 132, and the price of that share is 1 Ghana cedi. So that will make it 132,000 cedis. Okay. So we have additional one. That is the trade payable. So the trade payable that we have will also be reduced, and this is 132,000 shares. So take note of those ones that I'm putting in red. It's very important. Those ones that I'm putting in red. Because as far as the stated capital is concerned, we will see what we will do about that. So that makes it 132,000 cedis. All right. But the trade payable is going. The 240 is going. So 240 went to stated capital. So 240. This is what you do. You have analyzed it. You are done. And it says that the balance of the trade debt. You see, how much was the trade debt? He has had, it was 240, but he has had 132. So it means that there is a balance still owed to him. So the balance of the trade debt owed to Banda will now be written off against the equipment. So how much was our equipment? We are not selling, no? So don't come here. We are not selling. We are no more selling. So the balance will be against equity. Oh, this one is supposed to be 132, because the double entry is 132. We had 132,000. So to stated capital, 132 is the one going. And the remaining balance that makes it 240. How much is the balance? It is going to be against equipment. So how much is that? So we can even start our balance sheet. So equipment, they start with freehold property. And we won't sell the freehold property. Neither are we, the question telling us that
80,000.
it's what?
108,000.
108,000. Like this.
Oh.
No,
I had 280,000.
280,000.
The balance that will make this thing 240 is how much?
108.
But
108,000.
108,000. So
Yeah.
if we go to our balance sheet, they never said anything against our first item, right? Freehold property. There was nothing against it. So you can start your balance sheet with freehold property. The value will be the same. Don't forget, we are not selling. We are reconstructing. Freehold property. How much is that? 68.
Oh, so I'm getting 280,000.
Now, Adenangasa is 240. How do you get 280,000? That's the problem.
Is it not the 412 that you are taking out of there?
No.
The balance brought down.
We are not doing balance brought down. We are analyzing a statement.
Okay. Okay.
This is the statement. Where is it, Kra? The balance owed to Banda will be written off against equipment. Then you owe 240. This is it. You have done 132 out of it to offset stated capital. What is the balance?
Okay. Okay. I got
Please, you are analyzing statement. Of course, you can give me the balance carried down if there is nothing else about it. But we don't know yet. We have not finished reading. The only thing we know is that the property is 68. Now, equipment, we are setting off something against it. What is the equipment? How much is the equipment? 468. But we are taking something against it. How much? You said it's 108,
108.
108.
So what will be the balance?
360.
360.
Yes, sir.
All right. So then we something said about inventory too? I don't remember anything said about inventory. So it means we can get our inventory as well. Please, balance sheet is prepared using asset is equal to capital plus liability. So inventory is how much? Nothing was said against inventory. And inventory is 120. 120. All right. So the next thing we need to do is to find out if our cash will result in a positive balance or a negative balance. If it will result in a positive balance, cash will come here. If it will result in a negative balance, cash will be in the overdraft side, the liability side. So that's all. That's all. So let's go to the next statement for an analysis. The next statement, what did it say? Mahadi existing shareholders will receive one ordinary share in the reconstructed company, credited as 1 Ghana cedis. All right. So it means that in exchange for every 5 presently held. So this one is a share statement, meaning that they are going to you saw that already they were how much was the shares? 400,000 shares they were. Now the question is saying that they are going to exchange that. So you will receive one ordinary share. Please look at the words of the question very well. The existing shareholders will receive one ordinary share in the reconstructed company in exchange for every 5 presently held. Existing shareholders. As at now, who are the existing shareholders? All right. So all those existing shareholders, that are there. So the existing shareholders, Mahadi's existing shareholders were the 400,000 people, right? Shares. They are going to exchange it. So it said that they are going to exchange it for every one for every 5. So this is it. For every 5 presently held, they are going to get 1. How many shares is that? Yes, how many shares is that? 80,000. So the existing shares, meaning that.
Sir,
yes, please.
Question. Why are we dividing it by the 400?
No, it says Mahadi's existing shareholders.
Okay.
Yeah. So new people are coming in. Sometimes,
Yes.
if it includes these people, the examiner will give you a statement after the adjustment. He will tell you after. So if it is after, it means all these people are included.
Yeah, okay.
Yeah.
I was a little bit confused.
Yeah.
So I thought that we were going to add the 48 and then the 132.
Yeah. So sometimes, if it is going to be like that, then he will let you know. So it means that, you see, the word was an exchange, which means that these people will not be there anymore. They are going, they are coming. So it means that you have to take them out. They have to be out for them, because you can't say they have come in the form of 80,000. So, and the price was 1, so 80,000. You can't say they are there here and they have come here. So it means that it's a double do. They have to exit. It's an exchange. So they have to exit. That is the meaning. They have to exit. So it means that these stated capital people must leave. So there will be a cancellation of this whole stated capital people. So the exchange, unfortunately, when they did the exchange, you realize that the exchange that they are doing, they must be off. Oh, somebody is giving me some feedback. They must be off. So in the exchange, what do you think is the double entry? Because at the end of the day, this 100,000 has to go away. Oh, who is that?
It's like Mr. Steven also.
Okay. Okay. The city alarm is ringing, meaning it's 6 o'clock. Okay, so please, do you understand? But so my question to you, therefore, will be that the 100,000, where will it go? Because it used to be a balance carry down. It must leave. And when it leaves, then new ones can come in. So they did the exchange and this thing has left. And so they have come back in the form of this. So you can also say that there is a reduction of 20,000. Can you see that? And still keep, but here we have to change. But the amount, there has been a reduction of 20,000. So what does that mean? When you sell shares, okay, anyway, in this particular case, this one, since they've done a share for share exchange to 8 existing shareholders and they have collected probably money below the fair value, that share transaction that has done, you think they will collect money? Is that not it? The 80,000 will be a money collected. Is that not it? Guys, are you with me at all?
Yes, I'm here.
Yes, we are with you.
And I want your understanding of how to pass the double entries. They exchanged the original 100,000 shares, which were 400,000, the original 100,000 amount with 400,000 shares for 80,000 shares. So it means that this 400,000 shares will no more exist in the company again because they've exchanged it. So this thing should be out. It will be cancelled out. But I want to find out your understanding about the double entry, because the 100,000 must exit and the new 80,000 must come in. So what is your understanding about how you go around it? What do you think? I want opinions, because this analysis is very important. The more you're able to do this form of analysis, the more you are likely to have your figures balancing. Yes, Andy Rich.
Please, can you repeat the question?
Hey, why you are not in the class? I said this
My
statement.
network.
Analyze this statement. Okay, sir, it's a sacrifice. So my understanding is that no cash exchange will happen. That's very good. Sacrifice. Yes, who else?
No share exchange. Right.
Please don't judge somebody's answer. Tell us what you want to say.
I'm looking for the question you showed me. The balance of the trade debts.
I want like one person has spoken. I want like just 2 people to talk. Then I'll move on.
So I said it will be written off against the equipment. So
Are you in
meaning
this
you have to
class,
cut them.
boss? Are you in this class?
Yes, sir.
Then why are you throwing us out of something we have done already? Please concentrate.
Sir, can you say it's a right issue?
Uh-huh.
Well, they are saying to be exchanged for every 5 presently held for 1 Ghana cedi per
Okay.
share. So since there's a price attached, I don't know whether we can term as a right issue.
Oh, there's a price attached, and price is attached. It's just that right now, what they've done, what they've really done is that they've given away the number of shares. Of course, Reconstruction demands everybody making a sacrifice, but we want the accounting perspective of it. They have reduced their number of shares from 400 to 80 because for every 5 they had, they now give it out to maintain 1. And because they have done that, their stated capital, which was 100,000, is being reduced to what do we call it?
80,000.
80,000. So since you have spotted that it is a right issue, so sir, we will credit it against capital reduction. Now we are getting
Okay.
So for her, they are losing away what do we call it? 20,000.
20,000.
Yeah. So it means that they are reducing their amount to what do we call it? 80. So they are giving away the 20. So like I said, you could have recorded a reduction of 20,000. So here, and not record this 80,000. But at the end of the day, you have to know that your shares is gone. I don't know if you understand my point.
Yes.
Or you could also say that this figure is going. So let's write everything off. The 100,000 is going. So let's write everything off. Then this one, when they do, it means that they are going to pay money, which is 80,000. So you see that there will be a debit of 80,000. There is a credit of 100,000 in the reduction account. At the end of the day, when you look at it, it means there is a net of 20,000. So you can also say that let's not record this because it's about existing shareholders, but reduce them to 80, to reduce them by 20,000. I hope you are getting it.
Yes, please.
Yeah. So it's good that upon a further analysis, Anna is the same person who have come to say that let's write it. Because earlier you said that there is no cash exchange. There is a cash exchange, but it's just that there is a sacrifice in the cash exchange. So I don't know which one you prefer. So it means that we can do it both ways. But so you can say that capital reduction, they are sacrificing 20,000. So either way, you can do that. That capital reduction, they are sacrificing 20,000. Reduction, 20,000. And the shares is now gone. But bear in mind that the share is coming, the shares is now how many shares? 130, or what was that? What did you give me here? 80,000 shares. Bear that in mind, that this 400,000 shares is now 80,000 shares. Bear it in mind. We don't really need the shares part, but sometimes you'll be asked to do earnings per share after the reduction. So you need to know your total number of shares after the reduction. And that is why in the question, they normally give you the this one, profit. So that when you finish and you know the number of existing shares too that are there, then you can do earnings per share. That's what we used to do in financial management. Yeah. When I started teaching this thing, I had a set of questions I used to do, and I brought it out of financial management. I can share with you if you want, then you can practice them to see if it will balance. But it looks as if at this junction, you have a lot to do already than we bombarding you with more questions. What you need now is to understand procedures and how you do things. All right. So that is that. So it means in capital, or you can also write the 80,000. Corresponding entry of the 80,000 is cash book. You are receiving money. Then you write off the 100,000 to the reduction. Either way, it is.
Sir.
Yes, please.
Then why don't we record it at the credit and rather bracket the shares? That it means 320 shares are gone.
Yeah, you can do that. 320 shares. Yes, that is it. 320 shares. 320 20 shares.
20.
Yeah, you can do
Yeah.
that. Yeah, you can
Okay.
also do that. See, this part, what the examiner wants from you is to do the balance sheet too. But it's just that if you don't go through this process, balance sheet drafting will be difficult. So whatever you
Exactly.
do in here is up to you. It's up to you. But I need to show you so that you understand what you are doing. Do you know why we need to do the earnings per share? For example, somebody like Banda, at the end of the day, they said that if he doesn't do this reduction and he is to invest the money somewhere else, he will be gaining 15%. So you need to find out how much he will be earning per his share. So you need to do the earnings per share to justify your analysis. This thing is more than ratio. That is it worth it for him to even sacrifice for the reduction, or you should just stop and go and invest the money somewhere and earn 15%? That is it. So what will be the return on assets? Return on his equity for him. So that is what you'll be doing. You single him out. He has some shares. He is the one who has this 48 and this 32. So if you are doing it in his perspective, what is return? His return in terms of earnings per share or return on equity. So those are the analysis you must do. All right. So that is that. So let's go to reduction and record the 20,000. So what will it, stated capital 20,000. So you can do the 100,000 to reduction and also do 80,000 that is coming in to the cash book. All right, that one, your cash will receive some funds. That is that. Okay, so that is your analysis of that statement. And what else do we have? We've done up to where? This part. And it says that the balance on the retained earnings, that thing, we have taken care of that already. And it says that the fair value cost of the freehold property and the inventories are approximately their current value. So, of course, we have done that one too already. If there was a change, we would have done that. An additional 140,000 shares in Mahadi issued at 1 Ghana cedi will be issued to Banda. So, Banda is receiving a lot for a consideration of 140,000. So this is a clear case of issue of shares. So if they are issuing shares, cash will come. And this Banda, it is 140,000 shares. And how much is he bringing in? The price is 1 cedi, so it means stated capital another 140,000. Then it is cash. Cash is coming in. The cash already we had an overdraft, but additional cash is coming in. So we have stated capital cash coming in of 140,000. That is it. In order to improve the position, it has been estimated that Banda profits. So we are done. This is for profit. We are done. That's all. So close it out. Go and prepare finish your balance sheet. So what will be the balance carried down here? So that we close it out. What will be the balance carried down here? Close it out. I think that's all. This one is gone. What will be the balance carried down here? Get it for us. And lastly, our reduction to, which is supposed to balance. If it doesn't balance, you share, or you can take it straight to capital reserve. You can just take it straight to capital reserve. So as you see, this one is the balancing will be at the debit side, straight to capital reserve. So how much is that? That's like 28,000, or 48,000. 48,000, right? I'll be this one and this is, so here will be 88. Yeah, and here too will be 88. So in our balance sheet, the amount that is going to the capital reduction will be 48,000. Our capital surplus or This is it. It's called reserve. 48,000. And what were we left with? Let's do the cash and go and balance the cash side of our balance sheet straight. So what is the balance on the cash? Yes, what is the balance? Calculators or calculators.
72,000.
72,000. So it makes it 140. Yeah. Okay, so it means this carry down is going to our balance sheet. Where's our balance sheet? Cash 72,000. So let's balance it. Let's balance it. Then we come to our equity side. So let's go upstairs. Equity side, we have stated capital. So what is the balance on our stated capital account? Is somebody totaling or I should move? If it doesn't balance, you know. If it balances, you also know that you are correct. That's the beauty of capital reduction.
$620,000.
Total asset is 620,000. All right. So our stated capital, what did we get in our balance? What is stated capital? This is stated capital. What will be our balance? And please don't waste your time putting totals here. You don't have the luxury of that time in an exam. Just get this figure. That's all.
$400,000.
400,000. So straight, let's go and put it in there. Stated capital 400,000. So we have 220 to go. Let's find out. What else is left? Sundry payables, or after capital is capital surplus. So let's bring our reduction value. So capital reduction value, capital surplus. The reserve that we had, how much was that? $48, right? So plot it here, 48. The next line of item is retained earnings. And that one, we wrote it off. So there is nothing like retained earnings. What about 10% debenture? That one too was off, right? 10% debenture, that one too went out. Yeah, so do the sundry. What is the balance left in the sundry?
$172,000.
472,000. All right. So let's go and slot that 172,000. There will be no bank overdraft because it's reflected in our cash. So does it balance?
Yes.
Balance. Right. So that's all. All right. Now, according to the question, we are meant to prepare the statement of financial position on the assumption that, so that is what we have done. But I want us to do something extra. Can you calculate the earnings per share now? The profit was given. Profit was given to be 54. How many number of shares do you have now? So just in case you have a question that asks you to do that. Have you seen that? The number of shares is also 400,000. 80,
Yes.
48. Okay, so then you calculate your earnings per share. 400,000. Again,